Well, welcome everybody. Here we are to our 2018-2019 federal budget update. Last night, Treasurer Scott Morrison handed down his budget, his third budget, and what a lot of people are arguing to be an election budget. This wasn't a particularly exciting budget, certainly wasn't probably worth the wait, staying up late. No doubt those of you that decided to watch reruns of Brooklyn Nine-Nine are probably a lot more positive this morning than the rest of us. It's a budget that's going to reduce the deficit, projected to come down to about $14.5 billion within the next few years, working its way into a surplus. In my opinion, there wasn't too much controversial in this budget. There's a few tax handouts for low to middle income earners. There seems to be a heavy focus on the government to provide additional funding to some of our tax regulators, such as the ATO, to enforce the laws a bit more, and also focus on debt collection. Quite pleasingly is the topic of superannuation. Superannuation's almost been beaten within an inch of its life over the last 10 years, but this particular budget had very little impact on the superannuation sector, so that's actually quite a positive. So now we're going to run through a couple of those points in a little bit more detail. Firstly, we'll chat about individual income tax rates. So what the government are proposing here is to commence from the 2019 financial year, which effectively is a seven-year plan covering three steps in the changes to some of the marginal tax brackets, together with some rates. The goal being that the vast majority of individual taxpayers in Australia will be taxed within that 32.5% tax bracket. So at the end of the 7-year plan, you'll find those on incomes up to $200,000 will be largely taxed around the 32.5%. But immediately from the kick-off of these proposals from 1 July 18 is a increase effectively in the low income tax offset. So for those of you in that lower tax bracket, so up to $37,000, you'll receive a benefit of a few $100s when you lodge your tax return. For those in the next tax bracket, that benefits an annual benefit about $530. But again, as I said, it's just a change in the low income tax offset. So to take advantage of it, you have to lodge your tax return. It's not something that you'll see in your pay packet each week or fortnight. As expected, and something which has been leaked through the media over the last couple of weeks, was the government's view on the increase in the Medicare Levy surcharge, currently at 2%. It was previously planned to increase to 2.5%. That has since been decided by the government. They're not going to do the increase, so Medicare Levy will remain at 2% for the foreseeable future. There's still some good news for corporations. The company tax rate measures, which the government announced a year or two ago, they are going to continue to push that legislation through Parliament, with the effect being that all companies will get down to the 27.5% corporate tax rate. Eventually that's going to then filter its way down to 25% over about the next 5 or 10 years. As I mentioned earlier, this budget has a very strong focus on providing additional power and additional resources to the ATO in order to clamp down on certain black economies, the cash economies, corporate failures, and just general debt collection matters in general. The funding that's been given to the ATO for this is in the several hundreds of millions of dollars over the next 4 years. So the ATO research and policies they implement for compliance indicates that there's seems to be a lot of non-compliance out there, particularly around individuals claiming tax deductions, those sorts of things. As a result of that, the ATO is stepping up their data matching programs in order to combat what you might call dodgy deductions, and they're not just targeting the taxpayers, they are targeting tax agents as well. I also mentioned the black economy as well. That's a focus area for the ATO. They look at implementing new measures around how ABNs are issued, how ABNs are used, business-to-business transactions, to make sure that those actually involved in these transactions are legitimately identified and that compliance measures are met. They're also looking at implementing a new cash transaction threshold for business-to-business transactions. The figure they're using is $10,000, which basically they're saying that you'll be prohibited from transacting business-to-business for cash payments over the $10,000 threshold. What that effectively means is you'll need to use electronic type banking or sort of reverting back to the old days and writing out cheques for those that still do so. Taking that a little bit further with respect to sort of business-to-business transactions, particularly around those that pay employees and contractors in accordance with the pay-as-you-go rules, the government's proposing to deny tax deductions for payments to employees and contractors where pay-as-you-go withholding has failed to be made. That could be a fairly substantial cost to most businesses, and that's a clear indication that the ATO's focus is on employers meeting their obligations around pay-as-you-go withholding and superannuation. Similarly with tax office related debts, the government's also stepping up its collection activity in relation to those with outstanding welfare debts. And what they're looking to do is ensure that those that should be repaying any welfare payments do so promptly, and particularly targeting those with debts of $10,000 or more by implementing measures such as withholding welfare payments or directing some of their future welfare payments towards repayment of those debts. So what you can see from this budget is a clear indication that our government's not just happy to be putting in policies that see an improvement to their collections. They actually want to make sure they're collecting that money as quickly as they can as well. One pleasing announcement from the budget to assist small business is the continuation of the $20,000 instant write-off for assets. This $20,000 threshold was implemented a couple of years ago. It was expected to end on the 30th of June this year. The government are now extending the deduction for the instant write-off through to 30 June 2019. Keep in mind this applies to small businesses only, so you still need to meet the definition of a small business. And when acquiring these assets, they need to be acquired and installed ready for use prior to 30 June 2019. Now, whilst this is still a positive outcome and gives small business some tax relief, the tax deduction is not free, so businesses still need to pay for those items of equipment. So you still need to be mindful from a commercial perspective whether or not your business needs that particular item of equipment, and not simply purely based on a tax outcome. Now, I mentioned this budget didn't really have a large impact on the superannuation sector. Thankfully, that is the case. There are, however, some minor improvements that are proposed which will provide a lot of planning and assistance, particularly around the family units. The first proposal they're looking at is to increase the number of members allowed for a self-managed super fund from 4 to 6. This is particularly appealing, I guess, to families which are more than 4 people. And there's some planning opportunities around that when these laws become legislated, if at all. Effectively what that means, you may have a mum and dad approaching retirement. Now they can have mum, dad plus 4 others as members of the self-managed super fund. Previously that was only 4 members. So there's some planning opportunities around there, particularly those entering retirement phase and being able to create a bit of liquidity in their super fund to fund those retirement streams. So this is a measure that's designed to kick off in 2019. assuming, of course, these laws pass. Under current super laws regarding the contributions into super funds, for those over the age of 65, at present, to make these non-concessional contributions, you need to be meeting a work test. That work test for those over age 65 is to work 40 hours during a 1 month period during the year. They're looking at relaxing that. So for those over the age of 65 but under 74, if you don't meet the work test ordinarily, but you've got a balance of superannuation under 300,000, they're going to relax that law to allow contributions into superannuation. Quite often these budget changes, particularly around superannuation, are quite punitive for those that are at the high income end. One concession they're proposing, however, sees those earning more than 263,000 to be offered some concessions in relation to contributions that are made to their superannuation fund. And essentially what they're doing there is, for those that are earning just over 263,000, but you may be employed by multiple sources, you can actually elect with some of those employers not to have superannuation guarantee contributions made to your super fund, where it puts you over the 25,000 annual cap. This is a good thing, because then it means your contributions into your superannuation are not going to be taxed at the excess contribution rate. So this is a measure that's actually proposed to start from 1 July 2018. An example of a typical individual that may benefit from this might be a medical specialist or someone like that who has multiple employers, because you're working in a variety of hospitals. So that was just one example where this would be of benefit. And the last point I want to make regarding superannuation is particularly in that self-managed super space. Those of you who have self-managed super funds or are thinking about it, you'll be aware your fund needs to be audited every year. What the government are proposing now is that for those of you who have a good compliance history and have no issues around that with your fund for, say, consecutive period of 3 years, you'll get some relief from having to have your super fund audited every year, and it will then be audited every 3 years. Now, there's no a lot of detail on it at this stage, but basically what they're saying is, if you've lodged your super fund reports for 3 consecutive years without there being any compliance issues, you've lodged them on time, no qualifications, then you'll get some relief on future audits. So there's a win there for super fund trustees, I guess, in that respect. But again, that's a concession only aimed at those with a good compliance history. So in my opinion, they're probably the main points that came out of the budget, which have got significant relevance, I guess, to our client base. More detail will flow on those with our written release that will come out soon. But that's just an overall snapshot of the budget, what we consider to be somewhat relevant to our client base. Something that's not necessarily relevant to our client base, but relevant to a number of people around the country, is beer. And one of the things that the government have decided will be to extend a little bit of beer excise relief to, I guess, your micro breweries, your boutique breweries. And so that, for me, is a personal win, being a beer lover, of course, as we are here at WMS. So what impact that actually has on the price of beer, I guess, is not known at this stage, but from certainly a psychological boost, drink beer. So that's our budget release for 2019. As I mentioned earlier, this will come out in a bit more of a written form with a bit more detail on how that applies to you. Most of these changes are proposed to commence from 1 July 19. There are some that are coming out 1 July 18, but again, they need to be legislated. They need to be passed through 2 layers of Parliament. That's proving difficult for the current government. So again, as we say each year, just be mindful of what you read. They're simply proposals at this stage. Once they become law, obviously we'll keep you updated.